Have you noticed something interesting lately? Every time you check silver prices, they seem to be going up almost every single day. Not too long ago, silver was called the poor man's gold, but today, silver is quietly becoming one of the most expensive and most important metals in the world. Here's the crazy part. Over the last decade, from 2014 to 24, silver grew at a compounded rate of about 9.7% per annum. But in just one single year, silver prices have exploded up nearly 110%. So the big questions are, why is silver getting expensive? Why didn't prices rise earlier? And is this a real long-term shift or just a bubble? Let's break this down properly. Traditionally, silver around the world was mainly bought for jewelry, coins and bullion, utensils and household use, religious and ceremonial purposes. Silver was something people stored, passed down generations, and used on special occasions. But that version of silver is no longer the full story. Over the past decade, silver has quietly transformed into a critical industrial metal. In 2014, industrial usage was about 490 million ounces, roughly 45% of total silver demand. By 2024, industrial demand jumped to around 680 million ounces, or nearly 60% of total demand. Silver is now essential in solar panels, EVs, electronics and semiconductors, power grids, and data centers. Unlike gold, silver is consumed, not just stored. Once used in industry, it's often gone forever, and that changes everything. Now let's break down how silver is used in two key industries, solar and electric vehicles. We'll start with solar, the largest industrial consumer of silver. Each solar panel uses about 15 to 20 grams of silver to conduct electricity. That sounds small, but multiply that by millions of panels and the numbers explode. In 2014, solar panels used about 48 million ounces of silver. By 2024, solar alone consumed around 230 million ounces, nearly one-third of all industrial demand. And this isn't a one-country story. In 2024, the world added 600 gigawatts of new solar capacity, a 30% jump from the previous year. By 2030, global solar additions are expected to reach 4,000 gigawatts. Even though manufacturers try to reduce silver per panel, the sheer scale of solar growth keeps total silver consumption rising. This is structural demand, not a temporary spike. Well, next let's see how silver is used in EVs. Each EV uses 25 to 50 grams of silver in batteries, power electronics, charging units. That's significantly more than traditional ICE vehicles, which use 15 grams of silver. In 2014, EV adoption was minimal, so automotive silver demand was low. Today, automotive silver demand is about 90 million ounces per year, with EVs making up roughly 30%. By 2030, with 40 million EVs sold annually, silver demand from vehicles and charging infrastructure could reach above 100 million ounces. To this, add electronics, semiconductors, data centers, and 5G. And silver use in tech has more than doubled over the last decade. Now one could ask that these demand could have been predicted in advance and the prices should have risen earlier. Well, markets don't price stories, they price proof. For years, silver demand growth was forecasted, discussed, debated, but the market waited. What changed recently is that solar installations actually surged, EV adoption crossed meaningful levels, industrial demand visibly exceeded supply. The narrative moved from this might happen to this is happening right now. That's when prices move. Now, the problem is that the supply didn't respond to the growing demand. Silver supply is slow and rigid. Nearly 70% of silver is mined as a byproduct of copper, lead, and zinc. That means even if silver prices rise, miners can't quickly increase production. Supply depends on other metals being mined. On top of that, new silver mines take 10 to 15 years to develop. High-grade discoveries are becoming rarer. Environmental and regulatory hurdles are increasing. For several recent years, global silver demand has exceeded supply. Once the market realized this wasn't temporary, prices had to reprice higher. To top it all off, the macro conditions finally aligned for silver. Silver is unique because it's both an industrial metal and a monetary metal. For a long time, one side worked against the other. But in the past year, interest rates peaked, rate cut expectations increased, inflation risk stayed sticky. That combination is powerful for silver and it didn't exist earlier. Now let's answer the final question. Is this a bubble? A real bubble usually has no strong fundamentals, supply that can ramp up easily, heavy leverage, everyone buying blindly. Silver doesn't fit that picture. What we are seeing instead is real industrial demand, supply that cannot respond quickly, investors waking up late, some momentum layered on top. So this isn't a bubble. It's a repricing phase. What will happen next? Short term, expect volatility. Silver is famous for sharp pullbacks. A 20 to 30% correction would be normal. Long term, as long as industrial demands keep rising and silver remains constrained, silver prices are structurally supported. Not straight line up, but not a collapse either. So, the final takeaway from the video is silver didn't rise earlier because markets were waiting for proof. In the last year, demand became undeniable, supply stayed rigid, and macro conditions aligned. Silver is no longer just a precious metal, it's an industrial necessity, and demand is growing faster than supply. If you found this video useful, like the video, share it with someone planning to buy silver, and tell me in the comments, do you think silver can outperform gold in the coming year?